I'm Roger Horton, the chair of the committee. With us today is Mayor Bloom and Councilmember Helene Schneider. Before we start our agenda, we have 3 items on the agenda today. I'd like to ask Mr. Samario to comment on a story that perhaps some folks saw in the paper this morning. Bob.
Thank you, Mr. Chair, members of the committee. Bob Samario, Assistant Finance Director. And yes, today there was an article in the news press that at least attempted to describe our financial situation as of May 31st, which is the topic of today's, at least one of the topics for today's discussion. We've talked with Mr. Don Kadich, who is the Director of News Operations at the News Press, and we explained to him where the article was inaccurate, and it was really woefully inadequate in many areas. And he understood, and he is working now on a decision whether to retract the article or correct it. But I think by tomorrow it'll be resolved. We'll get some new information, or at least retracting what was written, and hopefully with some revised information. But he does understand the magnitude of the errors, and he felt bad about it, and he's working to come up with a solution.
Thanks, Bob. Committee members, anybody else want to comment on that? Okay, let's proceed with the agenda. Then we have today's agenda includes redevelopment agency report, fiscal year 2009 interim financials, and finally the May 2009 investment report. So the first item is the RDA report, and we have Brian Bossy here. Brian.
Good afternoon, Mr. Chair and Finance Committee members. As is our customary practice with our interim reports, we are happy to answer any questions you have regarding those, or at least do our best to do so. So with that, I'm happy to answer any questions.
It just so happens I do have some questions for you.
All right.
In looking at page 1 of the general fund report, I was surprised to see the property tax amount running at 110.96%. The thing that astounded me the most, I guess, was the one next in line, which is the investment income report, which is 187,000 or 187.88%, excuse me. And then the interest on loans, it's a small amount of money, but the aggregate amount being 928%. So I have a couple more questions, Brian, but if you could address those.
Sure, I'd be happy to. Well, generally what we do with our agency budget every year is we budget very conservatively when it comes to our property tax increment as well as our investment income. And that is the case here, and it's a good thing because we're getting additional income, which is always important. So we always budget very conservatively, and that's why you see the increases. In regards to the interest loans, up 928%. The major portion of that, actually, I want to say about $40,000 of that, are repayments from our State Street Sidewalk Benefit Assessment District. So if you recall, we had 4 phases of the sidewalk project, and in each of those phases there was an assessment district where the property owners put forward funding to, instead of doing a colored concrete, they went for an enhanced product, which was the brick, and so they covered that cost difference. So those are a number of those loans being due, and so that's a repayment on that.
Okay, so the interest on the loans. No, I guess what you didn't cover was the investment income.
Again, I'm sorry. What I did is I grouped both tax increment and investment income in the sense that we budget both very conservatively.
Okay, that's fine.
Yeah, sorry.
Then, let's see. I had one other minor question. On page 5, capital outlay, this is the Series 2003A. Under the IPM, which is number 3179, I was noticing that the project doesn't seem to be moving along very fast.
Yeah, well, that's actually a little deceiving. That project actually has 2 accounts. So another portion of that, it had to be split, is in our general fund, or I'm sorry, our 311, which is our general capital account. And so the total funding appropriated for that project was $150,000. So if you see in the 311 version of that, our general capital account, that has all been used up. So there's $50,000 there, and then roughly $6,000 in the 2003 bond account.
Fine.
The progress on that. They are due to wrap up those various improvements by the end of the calendar year.
Okay.
So we'll be all wrapped up
Good.
shortly.
Oh, then one other, let's see, what was I looking? Oh, yeah, the West Beach pedestrian improvements, which is 8958. That seems to be a little slow, huh?
Actually, we just started that project, and I think the reason you're not seeing it show up here is that contract was awarded, I want to say, after May 31st, if I'm not mistaken, or right around that time, so it probably didn't hit the books quite then. But we are out, actually, yesterday and today, actively pursuing that project. Thank you.
Excellent. Okay, that's all the questions I have. Anybody else? Ms. Snyder.
Thank you. This question's more about what's going on up in Sacramento and how that relates to the redevelopment agency, or if it does. As I understand, well, every minute it changes, but the current version of potential threat to redevelopment agency funds is that Sacramento would take a certain amount, and the argument to try to keep it constitutional on their end is that they would use this money for schools in redevelopment agency areas, as how I understand it. Now, I don't believe, except for the district headquarters, I don't even know if that's in our own redevelopment agency. It is. I think it's just right on the border. Right. So we don't have any schools in our redevelopment agency area, so I'm not quite sure how that works for us in particular. But perhaps you can comment on that, since there's been a lot of articles about in the papers, in the news, about what's going on with redevelopment agency funds and what the potential threat is to our own funds here.
Well, I think your analysis was spot on, and it's the same understanding we have. In regards to the state trying to make the taking constitutional or not unconstitutional, there's the understanding that the school district has to, my understanding of reading it, is either be in or service an area that includes schools or otherwise properties and things of that nature within the project area. Again, the admin building is the only facility I know of anymore, and that's on just outside of our project area. It's still up in the air, but what they are doing with trying to make this a constitutional taking of our redevelopment agency funds is they're proposing a 2009, which ends basically today, 2010 and 2011. So make it a 3-year taking of about, our impact would be about $1.4 to $1.5 million per year. So we are sitting on the edge of our seat, just like you are, waiting to see what type of resolution comes from that.
And the funds that we thought we had to allocate to the state earlier this year, that was just sort of a taking for the general fund up in the state, and that was deemed unconstitutional. So this is the next version of what could happen, and we don't know yet, depending on what Sacramento does.
That is correct.
What I didn't understand was, in terms of using the money towards schools in redevelopment agency areas throughout the state, is it for? Did you get the impression that it was for capital or operating expenses for schools within the redevelopment areas? Because these funds for us can only be used for capital funds, not for operating funds. In fact, we would get dinged by the state if we even tried to use some of these funds for operational purposes. So I didn't quite catch if what their version was in terms of how to use these funds for schools in the area. Do you have the answer to that?
I do not, but you
okay.
are correct in the fact that we can only use ours for capital improvements, not maintenance or operational issues. How that money, that EREF money, once it gets to a school, how they're allowed to spend it, I don't think they have the same requirements on
Okay.
them.
All right. Well, we'll still have to wait and see then. And so in our budget for next year, we have a contingency, or do we?
We do.
do.
What we've done
What we've
both
done.
in fiscal year 2009, we've set aside a little over $1.4 million, which was the taking proposed last year. That's still sitting there waiting to see the resolution of the court issues. And as part of this fiscal year 2010, we've also set aside $1.5 million.
Okay.
Just in
So we
case.
wouldn't be taking away from any current projects in hand. It's there. It's in a contingency account in case Sacramento is able to take that money from this account.
That is correct.
Okay.
But we sure would like to use it on capital or affordable
Yes, we
housing
would.
projects.
We'll see. Thank you very much.
Okay, further questions?
Just two things. It seems to me there's an argument to be said, and I know I'm arguing with Sacramento, which is kind of a silly thing to do, but that we don't have any schools, therefore you can't spend it on our schools, so you shouldn't take it. I mean, that's just, otherwise they would be taking it from us to spend on other people's schools, and I don't know if that's constitutional. So anyway, that little argument there. And then I just wanted to thank you for I just got the capital, I know that's not this, but the capital report, and that really helps a lot to see that. I really like that. It helped a lot. So, and I think if you're going to invest money and get 187%, some of us would like to give you some of our money. I think that's really good.
Actually,
I know we were.
There's a guy whose name is in the paper this morning that did that. But
Oh, that's right. Never mind. That's right. He made off with some money. That's true. Never mind. So thank you very much.
is there a motion?
I'll move this to the consent
Is there
calendar.
a second?
Second.
All those in favor say aye.
Aye.
Motion carries. Okay. Next is fiscal year interim financial statements. Is Rudy, are you going to be the man of the hour here?
Mr. Chair, members of the committee, again, as we did with the RDA financial statements, these are just here to answer questions. We don't have a prepared report.
Fine.
So,
Okay, Rudy, I have lots of questions.
Great. I think I've got lots of answers.
Okay. Starting out I'm looking at general fund here, page 3.
Okay.
Looking at licenses and permits, which is kind of up toward the top there, and that's running quite a bit ahead. I guess that's a good thing. Is there some reason why this year would be running so far ahead?
Well, first of all, this includes dog licenses and things like that primarily, and apparently the reason the biggest reason for this is just conservative budgeting. We had the same situation last year where we budgeted about $75,000 and we ended up at this point in time at $137,000. So it's really more of a conservative budget than anything.
Okay.
And we did pass an increase in the license fee, but I believe that one did not go into effect until June 1st, if I'm correct on that one. So
Okay.
that's not impacting it, but it will have an impact at the June 30th numbers.
All right. Down a little bit lower, library fines. Interesting that would be running behind. Seems like that would be right on target.
Yeah.
You know why?
We've talked with the library about this, and we don't have a definitive answer on this. Although that with the current systems that they have in place, reminding people about books that are due. I don't know if you use the library, but it's real nice now that they send you an email reminder saying that I just got one this morning that you have materials that are due. That's helped to get people to return their materials on time, and they've seen that there has been a little bit of an uptick in that, and that's one of the major reasons. Do you have any other comments on that, Jill? I mean, primarily there's not a significant glaring reason for it other
Okay,
than that.
that's fine. Moving over to page 7, Rudy, which is appropriated reserve.
Yes.
Is this a timing issue with us? We're running at 0.
I
guess I thought that would be a pro rata.
This is part of our mid-year budget balancing plan.
Okay.
Bob, did you want to
sure.
address that?
If I could, the appropriated reserve that we budget each year, and we used to budget a fixed amount every year, and this last couple of years we've set aside an amount to help deal with deteriorating revenues, state action, all those kinds of things. This year we were able to set aside $700,000. The intent of that is not to spend it, so you will never see any expenditures against the appropriated reserves. If we ever use it, it's actually moved to the appropriate line item where it's going to be spent. But in this case, we set it aside intentionally to have it lapse and be available to help our reserve balance at the end of the year.
So that's part of the plan that we've been looking at.
Right. That's exactly when we saw that we're having troubles this year. We recognized that we had that money set aside that would go unspent and therefore fall to our reserve balances by year end.
Okay. Page 8, looking at block grant. I can understand maybe that the expenditures would be below, but I was wondering why the revenue would be at 43.7. It looks like Brian has left.
Yeah, Brian has left, but
we can. You can get back to me if you don't have the answer for that.
On the CDBG, Bob, did you? Yeah, it's
Is it just waiting to
Just
get the
takes
money
the
from
time.
HUD, from Washington,
Yeah.
D.C., in order
Yeah.
to
I
I
really
mean, it's a
allocate
time
it?
because we have specific projects that can fall in those areas, and it depends on the timing of all kinds of
Yeah.
various things. So
Okay, that's fine.
normally it's low, but
Page 9, looking at Cater, wondering the 135, and then again the investment income at 111%. That's always good to see, but I just kind of wonder why on both those.
yeah. As far as the cater treatment charges are concerned, with the fires that we had this past year and the increased treatment costs that we've had, we have passed on a portion of those treatment costs to our partners in the cater plant. So Montecito Water, Carpinteria Water, those have ponied up some of the cost of the extra treatment, and so our revenues are higher because of that. And as far as the investment income, it was a conservative budget that they had in there. That's
Okay.
the only reason for that.
Same question on page 13, which is golf course fund investment income, again at about 113%.
Yeah, once again, I mean, the investment income is a real small portion of what they have out there, and so they always want to conservatively budget that because otherwise it could really distort things, and so it's purely a conservative budget on that item.
Okay. Page 15, under ICS,
Yes.
miscellaneous 4,005.
Yeah, I saw that one too. That's a pretty nice, 4,500% increase. Actually, what that is it's a sale of surplus scrap items that we've gotten. So it's auctioned items that we've been able to recoup some money on.
Okay, sounds good.
And we don't budget for those.
Happy to see that.
Yes.
Page 16,
Yes.
miscellaneous, startling.
Yeah, and that's legal settlement. We've had some
Okay.
legal settlements, and we got reimbursement on those, and
Yeah.
so that's what that is, as opposed to the $750,000, which is the return of the actual premiums. That $420,000 is settlement proceeds.
Good to hear. Page 17,
Yes.
miscellaneous 277 and special projects minus 775.
Yeah, in the information systems fund, they are embarking on a infrastructure upgrade, and the miscellaneous item that we have there, that reflects the transfer of some funds for that infrastructure upgrade that they've gotten from other funds in the city. And special projects, that was the one, right? Correct? The special projects? Yeah. The ICS, the information systems, they purchase software and things for various departments throughout the city, and they charge those back to those departments. Somebody gave us a wrong account number to charge that to, and it was miscoded. We've already caught this and redirected it, but as of the date that this was printed, that was out of whack, and so that's all fixed now. It really should have gone against the line item that's immediately above that for material supplies and services.
Okay, so you beat me to it.
Yeah.
All right, that's good to know. I don't have any more questions. Anybody else?
Well, first, I think you passed the examination with our finance chair. Back on page 2, and this is just going to go back in case people read today's Daily Papers article, and just to try to understand where the $17 million number came from in the subheading of the article. Where this is 11 months into the full 12-month fiscal year, which means 91.7% of the full fiscal year. And if you look at the total for all funds, the entire city, not just the general fund, but all the different funds, actually, Jill, or if you could move the paper over to show the percentage. Keep going. There you go.
There we go.
So in terms of the revenue, we've received 91.7% of the full revenue for the entire city, when we're 91.7% within the fiscal year. So actually we are right on target of where we should be. And if you look at our expenses are actually below where the full year is by 88.5% versus 91.7%.
Yeah.
So I think if you looked at that number, 17%, 17 million, if this was the end of the fiscal year and we didn't receive those funds, then yes, we would be in big trouble. But that is about 1 month's worth of revenues we should get for the entire year. That the month of June, we should see that. And it's not in this paper because this is only through the end of May. Is that a good explanation of what that number means?
That is correct. And
Okay.
one minor point that I would make also is that it says total for all funds. This is essentially the operating funds
Okay,
within
not
the
the
city.
capital.
It doesn't include the capital funds, and it doesn't include the special revenue, most of the special revenue funds. It's these funds that are listed here, which are primarily the operating funds within the city. And that's correct. This is 11 months of revenues.
Right,
and
and so
11
it's not
months of
until we
expenditures.
close out the books for this fiscal year where we'll see where all the final numbers lie in encumbrances and all those things in terms of how did we do
That
this
is
fiscal
correct.
year. Okay. I just wanted to make that clarification since the topic came up. So, thank
All
you.
right. Committees, anybody else have a question? Is there a
You've
motion?
asked them all.
I'll move this to consent calendar.
Is there a second?
Second.
All those in favor say aye.
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 Thank you, Rudy. Now,
Congratulations.
we have Miss Tara, who for the very first time in her career is going to present the investment report.
Oh,
My
good.
turn. Good afternoon, Chair Horton and committee members. I'm Jill Tarr, the Treasury Manager, and I'm here with the May 2009 Investment Report. As a non-quarter end report, I do not have a lengthy presentation, but I'd like to point out a few highlights from the investment report. And of course, I'm here to answer any questions you might have. Beginning on page 1 of the investment report, on the left-hand side, you can see the investment activity for the period. We had $10 million in purchases of federal agencies and a LAIF deposit of $6 million at the end of the month for total purchases and deposits of $16 million during the month of May. Down at the bottom of that section, you can see if you add up the LAIF withdrawals, we had $7 million in LAIF withdrawals. We had a $2 million Treasury note mature, as well as an FHLB maturity for $1.45 million and an FHLB call near the end of the month for $2 million. On page 1 on the right-hand side, you'll see the interest income for the period. Interest on the pooled investments was just under $434,000 for the month of May. The interest earned on the RDA cash held up at state LAIF account was $33,916 for total interest earned on the portfolio of $467,557. If we move on to page 2 of the investment report, the balance of the cash and investments in the portfolio, at the top you'll see at the end of April the balance was $176.27 million. At the end of May, the balance was $179.18 million for net cash and investment activity of an increase of 2.9. You'll see that the portfolio lengthened a bit from 386 average days to maturity at the end of April to 416 average days of maturity at the end of May, and that was due because of due to the purchases we made during the period of those federal agencies in the 3 to 4 year range. The yield to maturity dropped slightly by about 12.5 basis points from 3.27 to 3.15 roughly, and that was due to our maturing investments and calls that were at a higher stated rate versus what we can buy in and replace in our portfolio right now due to market conditions. I would like to point out that the year-to-date yield on the whole investment portfolio for fiscal year 2009 through 11 months is 3.97%. And you won't see that on the sheet. Bob, if you could zoom in at the bottom. I'd like to talk a little bit about the portfolio mix at the end of May. We had $65.1 million deposited in the state LAIF account. We have a $2 million certificate of deposit at Montecito Bank and Trust. Our federal agency issues at the end of May were $87 million, and corporate and medium-term notes at $15.25 million. We also, the investment portfolio holds a promissory note from the Santa Barbara Municipal Airport for $7.8 million. So that's the total of the investments is $177.1. We also have $2 million in a money market account at Santa Barbara Bank and Trust. And I'd like to take a moment to mention a little bit about our bank and to assure the committee that our entire investment portfolio is safe. And I know that you've been reading the headlines over the last week with regard to Pacific Capital Bank, which is the parent company of Santa Barbara Bank and Trust, where we do all our banking. And last week, PCB deferred interest on their junior subordinated notes and suspended dividend payments to stockholders. And that was due to increased capital requirements from the feds. And in response to this move to preserve capital and cash at the bank, Moody's downgraded PCB, and the stock dropped 20%. However, we don't believe that this has any effect on our investment portfolio. And in the event of bank failure, our investments are safe, and I'll explain why. If you look at the portfolio mix at the end of May, the LAIF deposits and the certificate of deposit at Montecito Bank and Trust and the airport promissory note are completely separate from Santa Barbara Bank and Trust. The federal agency issues and the corporate medium-term notes, those are held in a separate custodial account in our name and are not accounted for on the bank's assets. So they are completely separate, and in the event of bank failure are not at risk whatsoever. It's held in our name. So what we're really talking about here is what would happen in the event of a bank failure with that $2 million in the money market account. The first $250,000 of that is insured by the FDIC, and under state law, Santa Barbara Bank and Trust holds a separate local agency deposit portfolio in a custodial account at a third-party bank, and they use Bank of New York Mellon. And those deposits, local agency deposits, are collateralized with an investment portfolio at a minimum of 110%. And the investments that they purchase and hold in that investment portfolio meet the city's own investment policy standards. So they're municipals rated A or better, federal agencies, and treasuries. And the bank performs weekly collateralization tests and files compliance reports with the State Department of Financial Institutions every week. And as of the June 17th report, that local agency portfolio, held separately in our name, was collateralized at 125%. So that's above the minimum 110%. And I would like to pass out a letter that I received from the bank last week. I was in discussions with them all week, understanding what they've done, having them certify what they've been reporting to DFI. And so I wanted to share that with you and just let you know that our entire portfolio is safe, and just let you know, even though it is a serious situation with the bank right now, we feel we're continuing to monitor the situation carefully, and we'll certainly keep you apprised of any developments. So with that, I'd be happy to answer any questions.
Okay, Jill, thank you. I have a couple of questions. In terms of the LAIF rate, which is 1.53, do you recall, or maybe Bob or Rudy does, in our financial projection where we do our spreadsheets on income and expense, do you remember what rate we had budgeted for LAIF, what percentage?
You mean for budget purposes?
For our planning.
For planning purposes, we take an average for the portfolio as a whole. And
Well,
then
in our projections for 10, we had built in a LAIF rate, and I don't remember what that rate was. I didn't think it was this low.
1.5%.
Okay, so this is consistent with what we
Yes.
had planned for.
Yes.
Okay, that's good. And then in looking at the average days to maturity, which we talked about already a little bit, but it seemed like that jumped quite a few more days than I'm used to seeing
Well, it
from this
did.
period to last period. And can you explain that a little bit?
It did. We had the maturity and the call, and those totaled $5.45 million, which were very short because they were very close to
Yes.
the call or maturity. And then we had $10 million in purchases in the 3 to 4 year range. And so that really bumped it up, as well as a slight decrease in our LAIF rate, which is an average day of maturity of 1. So the combination of those factors, it is a much larger jump than we're used to seeing. But we did have more investment purchases than we've been seeing lately due to some favorable rates that we saw that
Yeah.
fit into our maturity ladder quite
Okay.
nicely during the month.
Well, that sounds fine to me. Any further questions, committee? Mayor Bloom. And
Oh, I just have, if you could remind me, the airport promissory note, we're selling our bonds out there. When is that due? I've forgotten. I know we loaned them some
It's
money.
due, I believe, July 15th
Oh, this year, okay.
of this year.
I knew it was a short, okay.
Well, of next fiscal year, which begins tomorrow.
Okay,
So in
there
a
you go.
couple
2
of weeks,
weeks.
that'll come due.
Okay, thank you. Just wanted to.
Oh, for 20 years. I'm sorry.
Oh, okay, same amount? I've forgotten how all that went, I'm sorry. Okay,
Well, it was for the rent-a-car place, right? Separate
Yeah.
from the...
okay. I don't know if I need maybe an email about it. I just kind of, I know we did it, and it just kind of went out of my brain.
Yeah, I'd be
Just a
happy
little
to
bit.
provide
Just simple,
the committee
you know.
members
Okay.
a
What we
summary
had-
of
Yeah,
of
thank
this.
you.
This current one expires in a couple of weeks,
Yeah.
and thank you, Jim, that it is renewed
Okay,
for a period.
thank you.
Well, just to follow up on the last page of the investment portfolio, it shows today as the maturity date, so I'm sure that needed to be updated from when we extended. I think we extended it when we
there it is.
sold the bonds, right? And then we made this separate and to extend the, so it just says 6/30/09 on the, they'll be updated.
Okay.
Great. Can you just comment, just another state issue and how it relates to us? One of the things that Sacramento is concerned about, depending on the budget, is being downgraded again in terms of their, by Moody's, and how that may or may not, hopefully may not, relate to our own investments being a public agency. Just to explain to anyone listening about how separate they are or not separate, or if there's any risk factor if the state of California gets downgraded based on what's happening with their budget.
Sure, Mr. Chair, Schneider, the state's potential downgrading by Moody's or the rating agencies will affect their ability to issue debt and the interest rates that they would pay on any debt issued. If you're referring to sort of the, you know, how does that affect our LAIF balances, it doesn't affect them. Those are just investments that are held on behalf of agencies or protected legally. So any difficulties they may have in issuing debt will not affect the LAIF balances or the investment pool that they have for the benefit of statewide agencies. If that was your
Yes,
kind of
just to
concern?
clarify,
Sure.
because especially LAIF, we can get on a daily
Right.
basis. It helps our cash flow, and, you know, didn't want that, what happens in Sacramento with their rating to affect how we're able to then
Right.
work our own cash flow
It's really
needs
two
here in the
different things
city.
going
Two
on
different
there,
things.
yeah.
Okay, well, thank you for that clarification.
okay, further questions, committee?
Thank you.
Is there a motion?
I'll move it to consent calendar.
Second.
Is there a second? Moved and seconded. All in favor, please say aye.
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 Thank you. I believe that's the end of our agenda today. I want to thank staff for answering questions and appreciate Ms. Tara's fine performance.